Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the euro currency. So you could see that yesterday we've got this upward bounce. Mostly it was triggered by really awful retail sales numbers in the United States, although we have expected that it should drop and should be below the expectations of the market. We even have made the post in our Telegram channel with the forecasts of the Bank of America concerning the release of the retail sales. Even Bank of America have expected 3 decimal point below the zero, while in reality it was the 8 decimal points below the zero. So it was really, well, 3 times worse than expected. It's really collapse in retail sales, I would say. And that has become the catalyst of the stronger upward action on the euro currency. But at the same time, market hasn't broken through the hasn't really destroyed yet the second resistance level that we have talked about. Today we will get another important numbers, PPI. Hardly it will become really as important as CPI numbers, but if surprisingly PPI will start showing rising on inflation, it will be also some shock for the markets, because as we have considered through the few months already, that the PPI shows stable disinflation, deflation in the production sector in the United States. If surprisingly PPI starts showing inflation, or at least start rising, this will be also negative impact. A few other moments that today we also will get the big bulk of the statistics on the real estate. We expect that hardly it will make significant impact on the market, but later in the session, Michigan numbers, especially concerning the consumer expectations and inflationary expectations, this might make impact in the market. Why I'm talking about this? Because if you have taken short positions recently, yes, of course you could just, well, decide to out of the position right now, but one of the options that existed, that you could wait for some minor reaction on confidence on intraday charts and then make a decision on the possible entry out of this position. Because current upward action, if euro currency will remain here, it doesn't erase the bearish context that we have here. But in the shorter term, it could mean that we could get strong bounce right there. And don't forget that we still have chances for this head and shoulders pattern. As I said previously many times, that I do not know what the reasons might be that push euro right to the 110, but at least based on the technical picture, this looks possible. And if we suggest that we absolutely do not know anything about the fundamental background and or other stuff, if you're using only the technical analysis for trading, I think that many traders could make the decision that they should wait for the top of the right arm will be formed. So, and if here we will not get downside continuation immediately today, maybe in the beginning of next week, it will mean that here it's probably we should be ready for some bullish minor patterns to be formed, suggesting possible further upward action. That logic is simple. That's why if you now have the shorts, you need to think about how you would enter out of this position if situation will start changing. So on the 4-hour time frame chart, currently we do not see something really special. So market stands inside of the channel by far. And our short-term scenario suggests that downside action should continue right from this point. Otherwise, this short-term context that we were considering today and yesterday, it will be erased and we start searching for something else. As a result, we could get deeper retracement, and one of the patterns that might be formed, it might be here's some kind of the hand and shoulders. If market will not start downward action immediately, we could get some kind of the hand and shoulders here, and the possible upward continuation. Later we could get another one with a larger part, and so So for now, the most important thing for today's session is whether the market will be able to stay around our confidence area where it has appeared yesterday, based on the retail sales numbers with this upward direction. It was everything great until retail sales has been released, but even retail sales haven't brought the total breakout and upward continuation. Market has stuck inside of the confluence. So, and one of the possible ways, if you're thinking about out of this position, one of the possible ways is maybe to wait for some, of course, keep stop loss, as usually you do, but Judd Napoli tells that very often when the market hits for a confidence area for the first time, it shows the healthy bounce down. And if you have read the book carefully, this was some advanced explanation exists where he explains the too strong action around the confidence. That's why he said that I'm usually out, not in the moment of the breakout, but I'm waiting when the market breaking the confidence. I wait usually for a bounce to the downside, out of this area, out of this trade where there's some minor profit or the break even, and when then market just continuing action against me in a direction that I haven't suggested. So that's one of the tools that you also could apply here if you are thinking about it. Besides, maybe depending on the numbers that we will get, market still keep chance on a possible downward continuation, although I would say that retail sales here, well, has not quite broken the overall picture, but makes it a bit weird. So not less attractive that it could be if we wouldn't get so strong drop in retail sales. Besides, if we're now taking a look at the other markets, for example, on the dollar index, today, for instance, we could get the grabber. And if grabber will be formed here, it suggests further upward action on the dollar index, which means that, well, this just explains why I think that this short-term bearish setup on the euro currency is not cancelled totally. So theoretically, it could work, but as you understand now, we're totally depend on some external factors that we can't forecast, unfortunately. So just keep an eye and see what will happen around this area. If you still decide to out, this market will show some pullback here. Maybe this will be a chance to do this, because if minor pullback should lead us to out of these positions, because market actually hasn't broken two predefined levels that we discussed yesterday for a possible entry on the short side. So, and then see what will happen. If by this day market return at the back up reaching 108 area, next week probably we'll start considering on some bullish continuation patterns that could trigger a bit more extended upward retracement. If not, and market will collapse, then our context of the short-term bearish scenario will remain intact. That in two words that we have.